Anna, we've had the bad loan and the client's legacy issues behind us now. What's your strategy going forward? What's the focus now?
So we had our results a few weeks ago. We believe the bank's making good progress on our turnaround. And now it's really about capturing all the opportunities across our markets. Here in ASEAN, we see a lot of opportunities, not just in the strong domestic GDP growth, 5% plus, but also in growing trade. A great example is Vietnam, where I was earlier this week. Interestingly, Vietnam's percentage of global trade has quintupled over the last 15 years, and 80% of its exports are now FDI driven. And that's an immense opportunity, obviously, for companies moving in and out of Vietnam, but obviously also for the international banks that serve these markets.
All right, ladies, my apologies. I have to interrupt right now. Just some breaking numbers again out of China. So we had the yuan numbers out. And right now we have the dollar figures out. And again, fairly wonky numbers, up 45% on exports. We were looking for 11% there. And imports only up 6.3%. We were expecting 8%. That takes you to a surplus of about 34 billion US dollars. So, yep, those are the headline numbers. For now, we'll get you more details, of course, when we do have them. Has, all yours.
Well, David talked about China. There's this threat of a trade war between China and the U.S. Could the markets that you're betting on in Southeast Asia be impacted and hence impact the outlook for the region?
Well, clearly, if there were an intense global trade war, we would all be impacted. We don't think that's the way it's going to go. We think that trade will still grow strongly across this region. China's opening and expansion across ASEAN and South Asia, the markets where I spend most of my time, is a huge opportunity, not just for the growing trade flows, but also for really huge infrastructure investment that's happening on the back of Belt and Road, where countries see it as an opportunity, a sort of once in a generation or maybe a several generation opportunities to really improve their infrastructure, which over the long term will be fantastic for trade. Logistics costs in these regions are still higher than global averages, and as they improve ports, railroads, shipping routes, it's really going to bring those costs down.
Let's break down the market. When you take a look at what's happening in Singapore, you've talked about consolidating your businesses here. What impact will that be on the bank?
Yeah. So we want to grow in Singapore. Singapore is a very important headquarters for us in terms of where our global businesses are housed. If you have global in your title at Standard Chartered, you're probably based in Singapore, which I think is different to many international banks. We're very strongly present here. Today, we have two different entities in Singapore, a subsidiary and a branch, and we've announced that we're bringing them into one, really as an avenue to grow more strongly here. We can eliminate some capital and liquidity inefficiencies and really create a great platform for growth in ASEAN and South Asia.
Anna, since we're talking about the region, you've exited some of your businesses, your retail business, I understand, in Thailand and the Philippines. Are there any more exits that you're mulling in the region that we should know of?
No, about 3 years ago, the bank had a new CEO. We looked at our strategy, and we really wanted to focus on where we could compete and win. We had a couple of sort of subscale retail businesses here in this region, the Philippines and Thailand. And we decided to exit those and really focus on growing where we really could compete and outperform. In particular, Singapore and India were two large early investments. But we have a lot of great retail businesses here. Indonesia, Malaysia, I already mentioned Vietnam. So no plans for further exits, just a whole lot of opportunity.
Okay, it's fairly expensive to run a bank in Asia, I would imagine, for you, Anna. And I think a lot of that comes down to costs. If I'm not mistaken, your costs were up over 5% in South Asia and also Southeast Asia. Your revenues were down, granted, to be fair, because of some of these exits. Give us a sense of where those two metrics go this year overall, revenues and also costs, and how does it jive with the bank's sort of global push to cut costs?
When we looked at our cost base a few years ago, we definitely saw opportunities. We announced a large cost out target, which we are on a very good track to achieve. But we also saw the need for a lot of investment, in particular in technology. The bank spends nearly $1.5 billion every year now on technology transformation and change. A good portion of that's coming to my markets in ASA, and it's really important given changing consumer needs. They want everything on their phone, they want it fast, and we really have to provide that capability. But from the cost side, as you digitize, that's also an opportunity, right? You can take operations costs down, reduce manual processes, move faster. So it's an initial cost program, which we make good progress on, a lot of investment, but ultimately that will drive efficiency. As we grow strongly, we don't want cost growth to grow at the same pace.
So fair to say that you're looking to cut costs further, and if so, where, how?
What we talk about is productivity. What we want is our cost base to grow less quickly than income. And we are investing, so it's not a cost out story. It's trying to invest in a sensible way that helps you drive more productive growth. And I think the wealth management business is a great example of this. So wealth management product income, so across the various places that we try to manage our clients' money, grew 17% last year. That's fantastic. We want to keep doing that. But as you can't have your cost base grow 7% in line, so you've got to really digitize to get productivity that makes that growth much more productive.
Okay, I want to touch on Indonesia. Lots of people asking what's going on there. Will you keep your stake in Permata or merge it with your local unit? What's the sense? I know that the CEO did say that a decision should be made by this year. How close are you to that?
So we love Indonesia as a market. I think everybody does. It's growing very strongly, and it's the largest market in Asean. We have two businesses there. We have StanChart's Indonesia, which we're very focused on investing in, and we also have the stake in Permata with Astra, who's a wonderful local partner. We've talked about the fact that over time it is more efficient to have one thing that you focus on in a market. Permata had some challenges in 2016. They just announced their 2017 results a few weeks ago, and they are recovering. And our focus has been very much on helping Permata recover and then figuring out what the future is. We do want to move to one presence, but we're in no hurry.
So how strongly can Permata recover? Is that recovery that you've seen so far sustainable?
They're making good progress. They're cleaning up the loan book. And they're also investing in digitizing, and they're growing nicely in the businesses that they're strong in, retail and SME, and we're going to help them do that.
What do you view as the biggest risk for the markets that you're in? Pretty much Southeast Asia and India as well. India, of course, being settled with a lot of bad debt and the fraud that we saw recently.
There's, you think about Standard Chartered, we're in over 60 countries across Asia, Africa, Middle East. These are the most dynamic growth markets in the world, but they also come with a fair degree of volatility. And the biggest risk question is a tough one because you can look across all these places and see risks. If there were some kind of major global, structural long-term slowdown or collapse of global trade, that'd be bad for all of us. It'd certainly be bad for Standard Chartered, but we absolutely don't see that happening. So we've been in all these markets, most of these markets for over 100 years. We have a very long-term view. It's about making the right investments. We ride volatility as it happens to make sure we get the proposition right for our customers in the long term.